Good morning. It's Harvey Jackson. Just going to go through the risk-off scenario ahead of the inauguration and why we might want to consider doing that. And so Kyle actually put out some trading and canola recommendations, but there's actually a fair bit of other recommendations with other commodities here as well. Just hard to make a case that there's going to be some bullish sentiment with this market, with Brazilian harvest happening, improved weather in Argentina, in the forward look. So if you're needing to get some movement in the spring, look at locking in some cash. So in his case, Camrose crush plant over there, but lock in some cash even with Yorkton crush plant. And the Bunge plants are a little bit off on the bids, but the LBC and Richardson are definitely got some strong bids. But we're also looking at maybe taking some short positions here as well. Just for the report and maybe for the next few weeks until trade gets figured out. Now, looking at shorting corn here as well, and even a short on soybeans, which I have a few clients who will very likely do some of that as well. So if you have any questions about the positions, just give me a call. So this is, I'm going to call it maybe a little bit weird as well. And the key factor here is some of the insiders on the Trump team have made leaks in the last couple of weeks here. Last couple of weeks ago, they made a leak saying about some of his expected policies. So he's keeping the rhetoric up pretty hot and heavy. But here they're actually saying that they're maybe just put the import duties 2 to 5% per month until the partners actually kind of get in line with his suggestions, and that would actually kind of cool the inflation that the Trump tariff, if it was all imposed at once, would be pretty devastating. So that's, he hasn't denied it yet, which is very likely maybe a little bit more fact, but we'll have to see. The tariff, even going on slowly, is still going to be a bit painful. Palm oil is following the soybean oil, and the crude oil is actually kind of mixed, but basically there's a few things. There's Middle East ceasefires on the table, and inventories are part of the discussion here too. So one of the things I was looking at this morning is just who's importing all of this Canadian canola oil, not just the seed but the oil, and you can see China's been pretty strong buyers in some years, and if you want to look at the years where we had the trade tariff on, basically in these years where it was really high, we're still pretty high exporter, but the big lion's share is the U.S., of course, of what gets exported around the world. So if we look at just U.S. by itself, 3.66 million metric tons in 2024 of canola oil imports. I took this from DTN, Mitch Miller, great article, with some more charts, of course, and which will follow. But some of the things that he's discussing there is just the fact that some of the canola oil making its way into the U.S. and some of the reasons why, and even in the case here, he's talking about just because it's a higher oil content than soybeans, and the producing just for the oil versus all this meal that's hitting this market. So the crush capacity in the U.S. is just kind of flourishing, but at the same time, it's actually putting some pressure on the meal and holding back the seed values. So you can see here, numbers are just what's used in the biofuel is just, soybean oil holds the lion's share, but then you see how canola oil is making its way in there as well. So soybeans, and I just want to point this out, this is the last Trump tariffs that he put on, so just keep that in mind. So canola is down $1.30, basically. European rapeseed down. Soybean oil is down a third of a penny. Palm oil down 70 ringgits, and crude oil is basically flat, but a little wee bit up here. And the wheats are down anywhere from a penny to 6 cents in some cases here. So, and the Canadian dollar is just trying to trade up a little bit. So if we look at canola, and I put in a relative strength index here just to see, overbought, oversold, and it's definitely telling us that there's a sell signal in here as well. RSI, or the slow stochastics, actually told us the same thing as well, but looks like it's getting like a little bit heavy, and maybe time to take some risk off here. Here's your European rapeseed price in Canadian dollars, $152 as of today. And what I've been watching for is this trying to continue and stay above there. If we can actually create a leg and get above here and start trading above there on rapeseed, that would be a good sign to support the canola. But it looks like we failed. But that doesn't mean that we will continue to fail. Your soybean oil, it's kind of starting to create a little bit of a plateau here. So there could be reason to just be concerned ahead of this inauguration here. Palm oil, same idea, but it's actually in this slide as we can see now. Crude oil, it could be plateauing here, but it's still great values for the producers of this product. So diesel fuel hasn't quite plateaued here, but it's still quite high. Soybeans, basically hitting, it's some sort of resistance there, and we'll see if it can break out. But it's definitely, this looks like a sell here as well. When you look at the relative strength index, Canadian dollar looks like short term has actually got a little bit of momentum up, but this is a very short term chart. It goes basically December 31st till now, and it's just that sideways move. But is there optimism that this is going to change? So this is just basically the look at how long this market has been trading sideways now on the Canadian dollar. So it's in a narrow but bottom of the range. Wheat really don't have a whole lot of stories. There's no real indicator here other than hitting cash sales at these higher values if there's any space available in the marketplace that I kind of work in. Wheat, so the Chicago wheat is basically going sideways, dropping, and same with Kansas, and still no strong indicators or anything saying to sell. But I think it comes into when we look at this, there's a fairly overbought kind of a situation here. So for corn to hold on here would be great to see, but at the same time, this is more likely to fail, and then if that fails, it's going to pull wheat with it. So that's not the story that I know a lot of people wanted to hear, but that's very likely what's going to happen. So we got some reports, or not reports, meetings going on in Saskatoon this week, and then Egg Days next week, and I'll be wandering around a little bit. So if anybody's coming down, I'm coming down on going down on Wednesday. So if I catch up with you there, that'd be great. Either way, we'll chat with you later.